Good morning, traders. Welcome to the Flow Show. I'm going to start by saying there's not much that puts me in a bad mood, apart from receiving an email saying that my energy prices are going up, and then looking at the chart of energy prices and seeing them flatlining since the pandemic. That's put me taking the shine off my morning, I can tell you. But what is good news, and what's good news for you, is that ForexAnalytix are certainly not putting their prices up, as you can see from the screen there. We have a big sale on. It's our 8-year anniversary, and there's some massive savings to be had on our subscriptions. You can see the details there. So if you're not already a subscriber, perhaps now's the time to jump on a decent price with that. And if you are a subscriber, these offers are stackable. You can add them on to whatever your subscription you got, be it monthly, if you take a semi or annual or whatever. So you can lock in that low price. And the good news is we don't mug off our customers by giving you a cheap discount for a year and then ramping up the price the next year. If you grab one of these discount prices, you will retain that price for as long as you keep subscribing. So when it comes to renewing a semi-annual or annual subscription, you'll have that same price. We won't bump you up and say only new customers get the discount. So never been a better time to lock in, particularly with the rest of the year. Going to be a big one for volatility and trading. So have a look at that. See if you can take advantage of that. Yes, Brian, that's what we do. We grandfather in all your prices. So we reward loyalty here at ForexAnalytix. So take a look at that. Offer expires end of September, so you haven't got long to do so. Morning, Kay. How you doing, mate? You had your energy price hike bill yet?
Good, and I did not have the email yet, but I suppose it must be in the mail, or the pigeon must be doing its round to come and deliver it a little later. Morning, everybody. Yeah, speaking about grandfathering, doesn't make us feel any younger.
Yeah, that's it. Yeah, go on. Put the boot in on that, and now tell us we're all old. But yeah, look, that's what I'm moaning about. This is Dutch gas prices. Okay, you can see we had all this stuff over the pandemic, but it's gone sideways, and but they're still trying to mug us off here in the UK. Right, move along, Ryan, before I really start ranting. Right, let's get stuck into it. Busy old day today. Lots of headlines, lots of stuff coming up. So let's get through it fairly quickly. Lots of PMIs out, which will go over. I haven't even got the calendar ready yet. See, there we go. Boom and boom. Right, starting off in China, we had the Caixin, the private bank services PMI, coming in a little bit worse than expected, down on last month, but still in expansion. While we're in China, they are potentially looking to cut their mortgage rates in 2 steps as a bit of protection for banks. We have had some minor cuts coming in some of the rates in China a month or so ago. We might get a few more. One thing that's playing on risk today is that a lot of banks and institutions are cutting China growth forecasts. So a lot of worries coming in around growth in Asia, global growth, and particularly China. UBS got the ball rolling, I think it was last week. They cut growth for 2024 to 4.6 from 4.9, and also cut 2025 a chunk to 4% from 4.6. Bank of America has done the same. They've cut 2024 to 4.8 from 5. TD is cut to 4.7 from 5.1. Citi have warned that China's official growth target, around 5%, could be at risk. Medium forecasts from all the banks, the Bloomberg survey, have cut their, or the median forecast is down to 4.8 from 4.9% prior. So as I say, this is something that's weighing on risk today, weighing on commodities, this rearing ugly head of Chinese growth. Over in Japan, one of the ruling LDP lawmakers, Motegi, says he aimed to declare a full exit from deflation within half a year. This is still the ongoing saga. It'll be a historical moment more than a market moving moment if they declare the end of deflation, considering how long they've been in it. It has been touted that they might have done something last year, but nothing came. But it may still come. It says it wants to achieve nominal economic growth of around 2.5% for the time being, and then growth exceeding that level to keep real wages in a positive territory. Given everything going on in the global growth at the moment, Kay, I think he's shooting for the stars there, isn't he?
Yeah. Did he say over the next half a year or over the next half a century? I mean, yeah, I think for the time being, it's a bit of wishful thinking, especially with the Japanese economy so much turned towards the outside to get growth, especially like the very big companies like the car makers or the heavy machinery makers, just to name those. Well, you can add chips and things, which is still a booming market, but and the rest is not looking that great on global growth right now. Yeah, I mean they've been trying to do it for a number of years now. It was the big promise when Kuroda and Abe arrived, and that is now 12 years ago. So yeah, working on it, as they say.
I mean, what's going to happen? You know, they're going to try to grow into a global economy that will be weakening. What happens if they don't succeed? I mean, are we seeing dollar yen, 200s, or will the US side of things, if they're sort of bumping along the ground and weak growth, will that counter a bounce in yen pairs?
That's a very good question, Ryan, and I think you have to take the time aspect into consideration there, because I think if you really look at the long term, so you're talking about years, right? I'd say the next year or so is going to be very important because we are at the end of we are at the start of a cutting cycle. Elsewhere, we have big US elections coming up, which you can turn it as you wish, but which can impact global growth, depending on who gets it and how strict or also the one or the other side may be. You can have actually, as already been talked about, and people mentioning that you can have the fact that China is also not growing, or that the US may not even have a president on the 1st of January if worse comes to worse. But there's a lot that will be going on, and which will impact growth all around, because then you have China as well, one of the engines of the world, but now hampered by internal affairs as well as geopolitics. There's a lot that is going to impact. So if you look at the real longer term, then against that is where the real test will be for Japan as well, I would say. Because imagine that you come at the end of 2025, which is about a little over a year away, and things are not going the way people would have hoped, like soft landings or the global economy starting to pick up. Japan will struggle as well, and then if you look at that longer term, then I think I will have to pick up my opinion again and say dollar yen is going to trade 200 after all. But it is, I think timing is going to be, and the time gap that we have between now and then, it's going to be a longer term thing, because it's very, very hard to pin exactly rightly what we are going to get in the next even 6 months,
Yeah.
So I think really it's a question for later. Whatever the Japanese officials may declare in the meantime, they can change opinions as well, right? But yeah, It's a tough question to answer right now, but we will see what happens a year down the line, I say.
Yeah, definitely one to keep an eye on, because that's when you get the big possible trends. And Patrick, you're right.
Yeah.
You know, Japan's bad demographics. That's always bubbling under the
Yeah.
surface. And the ton of debt. Yeah, it's a bad combo. Again,
Yeah.
it's another timeline thing. You know, the BOJ owning over half the bond market. So it is a big thing, it is a big deal, but they can just let those roll off. It doesn't cost them anything. The issue is going to be who picks up the debt, who buys the debt if the Bank of Japan aren't picking it up. But as we saw yesterday, we got a pretty good 10-year auction, at least in bid to cover basis. So there is some appetite there, but lots of moving parts as always we get with Japan.
And that is a global issue, Patrick. It's not Japan. It's in the States. It's in some countries in Europe as well. It's a global issue, and it's not something that. Since I've been in markets, I've been hearing about, oh, the debt is unsustainable everywhere, and what happens? We just move on, and there's going to be more debt, and there's going to be more bond issuances, and if debt would really be a huge issue, which is getting uncontrollable, you would see U.S. interest rates at 6% and Japanese interest rates perhaps at 2 or 2.5% or so, and massive interventions by central banks to try to control it. But I mean, it's always something that is on people's minds. But to trade it, you have to go and look at credit rather than really sometimes the currency. How much has the dollar been affected by bad debt? I mean, or huge debt amounts. I mean, very little, right?
It's probably the world's biggest head in the sand event, global debt. You know, if you just take the US, if all that starts going pop, it's, you know, you'll make the GFC and banking crisis look like a flash crash. But it's too big to blow up. Well, touch wood. let's not go down that road. Right, let's move on. Australia's GDP came out pretty weak as expected, 0.2% on the quarter, which was up on last quarter, although that got revised up from 0.1 to 0.2, so it came in roughly unchanged. Year on year came in as expected, 1%. So again, another country bumping along the ground. Coming back to the PMIs, because we had that as well from Australia services number there. Bit of an improvement over expectations and a decent bounce on last month as well, 52.5. Japan there too, 53.7, so matching last month was expected to rise. Then we got stuck into some of the other PMIs that we got today from Europe and whatnot. Italy down on expectations. A lot of these are, or Italy is the main number, not the final number. So that came in lower than expected in last month, 51.4. Spain doing okay, an increase, but not as much as expected. As for the rest, Germany, 51.2, so a little bit softer than the flash. France coming in unchanged on the flash number. The Olympic effect seen in that number there, so we're expecting a big drop off next month because that looks to be a temporary effect, a big jump there of 5 points confirmed. I said they've got the Olympics going on there. The pan-Eurozone number improved, not as much as expected. UK done well, that improved by 4 pips over the flash number, 53.3, and improvement on last month, so still a bit of exceptionalism there. PPI for the Eurozone came in not as low as expected, minus 2.1 versus minus 2.5 expected. A bit hotter on the month as well, up 0.8%. Inflation, a lot of ECB members saying that inflation, particularly GARD, is likely to pick up into the end of the year. Back over at Germany, not good news over there. Volkswagen is potentially or going to be closing some plants over there, which has gone down like a lead balloon in Germany. and it's potentially going to lead to a showdown with unions, because obviously if those plants are closing, then people are going to get tinned. Well, it's tin-tacked for you Londoners, sacked, a bit of slang there. So that's not going down too well. It's nearly shut the fuck up day in the ECB. So it's last orders for all those squawkers. The ECB meeting on the 12th, so they will go into their blackout period this weekend. And in the meantime, they're all coming out with their last-minute thoughts. ECB Simkus says it's quite, this is a no-shit Sherlock headline, it's quite unlikely we'll cut rates in October. Well, we can say it's quite unlikely they'll raise rates in October either, for what that was worth. ECB's Nagel says euro area inflation is on the right track, and taking a bit of a victory lap, saying the great wave of inflation is over. Kestrel Kazaks, one of the hawks, says we can take the next step to lower rates next meeting. The pace of wage growth is slowing. We can lower rates but must be cautious. Consumers have more money and are saving it. ECB's Big Onion, Cipollone, says we are not pre-committing to any path. We will take our decisions on a meeting-by-meeting basis, and hopes the data allows the ECB to be less restrictive. Stornomas says even with more rate cuts, policy will be restrictive. Further PMI data, all yesterday's stuff coming from the US and Canada. Canada showing a decent improvement, still in contraction, but a jump to near expansion, 49.5. The final S&P PMI came in softer than the flash number by a pip, 47.9, confirming a dip from last month. Then we got the ISM, which, well, looked pretty good. It improved. The headline number improved, 47.2, not as much as expected, but still an improvement. Prices went up. So a bit of inflationary pressure still there, 54. And that employment number that took a near 6-point dive last month improved by just over 2.5 points to 46. So it wasn't another horror story, although it does remain in contraction, as it has done for over 2 years, bar the odd exception. So no real change from that one. I think, though, Kay, that ISM wasn't as bad as maybe the market was looking for or thinking about.
No, it wasn't. Bit of a grabbing back on the sub indicators. Employment rose quite a bit, still below still below the 50 mark, and we know that the market is attaching more importance to what's happening in the services sector. But yeah, I mean, it kept the dollar relatively big, I am going to say. But yeah, I think yesterday's data got a bit pushed aside by what happened later in the day or over the day on the equity markets, right? So I think the real tests are ahead of us, I'm going to say, with all the jobs data coming out from today, and then we will also have the ISM services tomorrow. Yep, tomorrow.
Yeah.
And yeah, I think that's going to be bigger fish to fry there.
Yeah, I agree with that. So after all that data got out of the way, you say, stocks really had a bit of a pasting. There's the tech sector getting a bit of a bashing once again. We also had Fed's Mester out. She's a former central banker. She left last month. I think it was last month or end of July. I can't remember. Speaking on CNBC, saying that the Fed will be discussing 25 or 50 BPs, which that put a little bit of a torpedo in the dollar and yields yesterday as well. But as we always say, formers don't really count for much at all. On the oil front, we're seeing oil continuing to fall out of bed. Let's just pull up a chart while we're talking about it. Let's look. I'm going to look at UK. I'm going to look at Brent as I'm looking to trade that one. So obviously we've got this China stuff going on, weaker or lower expectations for growth. We've got OPEC Plus potentially looking to ramp up production in October. We've got Libya, possibly their shutdowns coming back online. So the supply side looks to be picking up, all while the demand side remains weak. So all those ingredients adding to oil continuing to look at the downside. Brent, I'm looking at this level here down around the 70, 72 area. Bit of a decent support area. So purely from a tech play, I'm going to be looking, I've got some bids in to try and take advantage of any bounce that comes from that. But if this global growth picture remains as weak as it is, then we could be heading much lower in oil. Here's a fun headline. The SEC apparently is to charge 6 credit rating agencies with significant record-keeping failures. These are the lot that decide the fortunes, investment grades of countries and firms and whatever. But it seems they've been up to no good or failing to follow the rules themselves. So the SEC is on their back. Rating agencies got a bit of a bashing over the GFC and banking crisis when they started cutting everyone's ratings, and countries weren't happy with that.
Sharks getting hunted by bigger sharks.
Yeah, exactly. Yeah, exactly. Good luck to them. Yeah, that was a long time ago, if you remember that, Patrick. It brought about that rule where rating agencies now can't issue rate changes or rating advice until after the markets have closed, because they were doing it during market hours and getting everyone in tizzy. Anyway, moving on. Kay, any other news or headlines you've got?
No, not really too much news. Well, geopolitics, but we can talk about that every day for an hour and a half. No, but the interesting thing that I read is the amount of debt being issued by blue chip companies, as apparently, and we had a bit of a heads up in that regards. This month and even this week, and it seems that those people now are trying to take a bit advantage of the lower yields that we see everywhere. And the reason why they are doing it now with yields lower is that they think that whoever gets it, but especially Trump, it seems, whoever gets the U.S. election will send yields higher, because they are going to loosen the fiscal policy. So there's a lot of debt being issued by very big companies, and they are taking advantage of those low yields. So not saying it will hold them up, but something to keep an eye on, because if we, for some reason which is not extremely clear, we would see yields bottoming out here and starting to rise a bit. Of course, it's corporate debt, and we don't always find it back in a traditional way, but it could mean that yields may find a little bit of a bottom here, because there's a lot of debt being issued, and it's not only US, it is really global by the very big companies. So keep an eye on those yields, because also it's happening in Europe. It's also happening in Asia as well. All right, so it's a bit global. So that is something interesting I thought to mention.
Yeah, thanks, mate. Good stuff as always. Right, probably the big event today, one of the big events today, is going to be the BOC, and they're expected to cut rates once again for the third time running to 4.25%. There is a press conference alongside this meeting, so we'll get to hear from Macklem and his crew, Stiff and Rogers, as we like to call them. So we'll be hearing from them. If we take it that they are going to cut rates, obviously there's always a chance that they don't. What we're really going to be looking for is the forward guidance. Is this a third cut and then a pause? Are they going to keep going? Or what are they going to do? Are they approaching their touted limit of divergence between them and the Fed? So really, it's not about the rate cut. whether it happens. It's more about what is going to happen in the future. If they consider that they're going to be happy to continue cutting rates, we could see a bit of weakness in CAD, Canadian dollar. Conversely, if it's a cut and a pause, then we may see a bit of strength. So I think, personally, I think it's a bit binary, the price move today. Now, what I think we should be looking for, and if you want to take dollar CAD as the main example, really, and what I'm going to be looking for is if we see any moves in dollar CAD that takes it out of sync with what's going on with the Fed. So, for example, if we see a decent rally in dollar CAD, i.e. CAD weakening, I think that potentially may present an opportunity for a short, considering that the market is so dovish about the Fed at the moment. So once we get over the BOC, the market will switch back to the Fed. So if this dollar CAD price has moved out of sync with what the Fed thinking is, as I say, this going up significantly, I think the market's going to hit it if it goes up significantly. So I'm looking potentially for a fade move. I'm out all my shorts, so I got triggered on my trailer. The only other side I'd look at is maybe if we get a move down sub this price support, I'll be looking. There's a big another range edge down towards the 132s, 131s, a big old area down there. So any move down there, I'd consider playing the range on the other side. Kay, you got any thoughts for the BOC?
Well, I think you made a good summary of what we've been saying last week as well, or start of the week when we started to look at it. Yep, never rule out a surprise that they wouldn't cut, or that McClem has been poked enough by Rogers to say that the divergence with the Fed is now big enough, so which would hint at a pause. As to pick a side in the Canadian dollar, I'm less inclined to do so, because it may be that the Canadian dollar has not traded the oil buzz because the Bank of Canada coming up, and
yeah,
if they're dovish enough or so, then I think the dollar CAD could actually be in for a bit of a surprise run. Beyond perhaps even 136.5, and then we'll see what happens next. But that's in case of the dovish side. But of course, there's always, as I said, the potential that they say like, yeah, we're done for now, and now we're waiting. The data have been telling us that we can cut down to here, but no further, right? That's always the possibility. So yeah, binary event. I'm going
what
to
about
say,
some of the CAD crosses? Anything other than versus a dollar you'd look at?
Not in particular right now, to be fair, because I don't have. I would say if to me, I would rather perhaps buy a dollar CAD dip in current scenario. But then, if you look at Euro CAD, for instance, I'm not inclined to buy euro. So no, I'm not really looking at any specific Canadian cross. No, absolutely not today.
Yeah, no worries, mate. I think probably over the course of the BOC, I think the levels are pretty clear. We've got to watch this big break point, 135.80s up to 136.15-ish. That's your big level. Whatever happens, if we can't get through there, that's going to keep this down move in play. Conversely, watch for a move down to some of this old support down here, particularly at 134.30s area, and this 135, 136, 60, 70 zone as well. So I think maybe over the course of the BOC, that's the sort of range you want to be maybe looking to trade. And then if you get any extreme moves outside of that, watch for whether they hold or whether they reverse pretty quickly and put us back in the range. And yes, the oil correlation has been a bit flaky over the last few months. It's on, it's off, it's on, it's off. It's probably maybe going to reassert itself a bit after the BOC, once we get over that hump. If oil is still moving lower and keeps going, then maybe the caddy's going to take a bit more notice. So lots in the mix for that one anyway. Quick look at the euro, which isn't doing an awful lot at the moment. Pretty calm compared to what's going on elsewhere. We did get a move down through this 110.40 and the fib 38s. It didn't last. We're back above it. We're holding it back as support again, so not ready to really bust a move there. Probably going to have to get the US data to bring us a move for that one. Euro sterling, the pound's been a bit all over the place at the moment. We did look like we were coming down and maybe having a proper test to this 84 level. We haven't. We're back up. We are just still keeping a shallow uptrend here. Even though this move broke below these lows, it still didn't get quite as far as these lows. So we're still putting in a series of higher lows and just squeaking out some higher highs, even by a couple of pips, just keeps the momentum going. But as you know, this one can go at snail's pace. So we could be sitting in a 30-40 pip range for the foreseeable, barring any big news. Ali, you're still short. I'm still short as well, but it's looking like we might get a bit of a move higher. For now, the sentiment seems to be buy the dips rather than really smash the rallies. So I hope you get your levels, mate, but at the moment it can't even get close to that 84 handle. So be very careful about that one. Yes, mate.
Yeah, I think it's some people who are short could also technically be looking at like a bear flag, some may say. And on the other hand, I think the data are still supportive for it to remain heavy. But and also then on the price action front, I find it quite interesting to find those bids around 84 and then to find those offers around 30-35. Because now we've been trying like 4 or 5 times to get back above 35, and it doesn't happen either. I think there's a good few options at play around 84, and those people are buying back into it and then setting their delta back out a little bit higher. It really makes me think of a typical play like that. You know, if you if you bought a put on the way down, you're trying to make back your premium. On the one hand, you have to cover a little bit when it comes down to your target, to your strike. It really makes me think of a typical that some people are playing it from the options side, and you won't probably find it back in any expiry program right now unless there are some showing up. Yeah, it does make me feel like there's a few options going around here, and because regardless what we get on the latest data, it is not moving too much. And looking at lower or higher lows there in this small range, I'm actually surprised that we are not higher in the euro sterling based on what we saw in risk yesterday, where risk got absolutely hammered through the equity markets, and oil much lower, metals under the cush as well, and sterling being a bit of a risk currency, euro sterling being a little bit of a risk pair. I would have imagined that we opened or that we have closed would have closed higher yesterday, and it doesn't. So there is something weighing on it too.
Yeah, and the pound can also be a bit of a commodity currency as well when you get big moves in oil. But yeah, we've had this play down at this 30s level before. It's a bit of a level on the way down. When we first came down, then it was a level again on bounces. This is just a smaller version of what we've got going on here. But it could go either way. Ali, yeah, I'm short from the 86s, mate, up here. So I've got a bit of margin. I've got my trading stop 84.60. So that's my
that's
pay
the
level.
one.
Yeah, just about there.
I think that's the level. For as long as we stay below 80. 84, 50, 60. That's the level as well, in my opinion. But already
Yeah,
interesting. I find it that this cap around 85, around 35, which may also mean that if we break above 35, we could have a quick run up to 50, 60.
yeah. I'm just looking at it now. I might have to stick my stop 5 pips higher than the 60 level, seeing as we got a bit of
Yeah,
action
mine
there.
is a 65.
Yeah, okay. I'm going to get 66 then, just to
Ah,
just to build that room in against you. So anyway, Ali, yeah, I'm in a different trade, mate, because I've already taken tons of profit on this one, so I'm just playing with a trailer. I'm still don't know if I want to go long down here, whether sticking sell stops or whatever, but likelihood is I don't have to rush. As we know, we can sit down here for weeks at a level, so there's plenty of time to formulate a plan one way or t'other. Right, time's ticking on, Case. I'm going to bounce it over to you, mate, for a couple. Boom, boom, boom. All yours, mate.
okie dokie. Cable, you were asking. I found cable holding. Well, there is to me there is this whole zone here. Okay, so you got a few trendline supports, a bit fragile perhaps, but they are there. Also, the 38.2 of this last move higher comes in around 130.85, 87. It held there. To me, there's a whole zone here. If you look at the move from not really where it started, but really this last move here. Let me try and see where that brings us. You see, that's also somewhere in the 130 40s. For as long as it stays above this 130, call it 2040 zone, this whole move is still viable, in my opinion, for now. The data in the UK are okay. We're expecting some rate cuts, but I've also said that the risk zone or the risk timing for sterling is going to be second part of this month, especially running into the budget, perhaps, because that could, I'm not saying it will happen, but that could mean the end of the honeymoon period with the new government if they make any mistakes. But yeah, in the meantime, I think it's still positive overall in the cable. Yeah, we had a bit of that move. You're correct. No moves are going in one way direction. Yeah, but also the way I'm encouraged in saying that it is still positive is again coming back to what happened in the equity markets yesterday and what happens in the equity markets overall today, what happens in oil, what happens in what happened on risk, and sterling being a risk currency, it did hold where it had to hold and even where it started to have to hold. Okay, so that I think is still a positive factor for the sterling. If we get down below yesterday's lows again, then there is, as I said, the potential to get back down here. Now, on the other side, watch what's happening around here, 131, 45, 55. And here 45, yeah, 45, 65. We start to get back above there, then I guess we are going to retest those highs. But may have to wait for the data that we get out of the US, of course. Swissy. Swiss is going up and down with risk. So we had a very big setback on the risk front here, right? And Swiss is really moving in line with risk now. What is interesting, though, is that we did, and perhaps I should go on a bit of a shorter time frame. We did also, even as other equity markets today are still coming down, we started to have a bit of a rebound here. So keep an eye on it, because I'm still not sure that there is not a bit of a lazy S&B interest perhaps on if and when Swiss franc strengthened. On the dollar Swiss. What did you do? Did you have a position on the dollar Swiss as well? You're long on dollar Swiss. I don't know. We have all those data coming up. Really, we're turning around. Where's dollar Swiss trading right now? Yeah, we're turning just above here. I really don't know. Just take the day's low and then see what happens if you're long. I really have not too much of a view. It's all going to be directed by risk, in my opinion, right here and now, and what the US data are showing us. Positive, really, to get positive, you gotta go back above 85, 85, 20, 30, really. If you start to move back above 85, 30, then we could go higher. We need to have a look at what happened there, right, on the S&P, because everything was like in panic mode again yesterday, driven by NVIDIA and its subpoena, the SEC trying to make money. Well, we are on the level here, 54.95, 5,500. That's the level. It has been traded quite often as a psychological level. It is one, all right? So let's see what the market does. We are not very far away. We are 55.10-ish right now. So keep an eye on what's happening here. If we start to break, then I think we look every there's some at 54.5, but then I think the market is really going to pay very close attention to what happens around 5,400. That will be your next big level. Now, to alleviate all this pressure to the downside, you got to go back above 55.45, 55.50. Okay, 55.50. If you start to get back above there, then I think this is yet another scare. Okay, we had a much bigger one here, but we had already moves like this. But if you start to go back above 55.45, 50, then it, in my opinion, will be a lot bigger scare than what the market are afraid of. Okay. Gold. It's trying to hold. It is trying to hold. Yes, we are back below that 24.90, where I said like it was playing ping pong earlier in the week. 24.90, we dropped back below into the zone here, spiked again, and this morning we went back down to close to 24.70 again. This is really the level that should hold. And if it starts to get under 24.67 or so, then there's a deeper correction possible down to 24.40s. I'm shyly long a little bit. But I won't be a hero and or try to be stubborn. If it goes down here, I'm gonna get out. It's small positions, small risk. I did take this whole move, so I'm really trying to play this zone here. Okay, silver looking weak right now. As I mentioned a good few times, we needed to get above 30, figure 30 and a quarter. Failed, and we are on our way back to lower levels. Low 27s into the mid 26s, and that's where I'm probably going to start to get interested again, unless I see more negative economic data coming out of different countries right now. I mean, the China not being too not looking too sexy right now is probably weighing on it as well. So keep an eye on all of that. All the commodities coming off. So silver being an industrial metal, be a bit careful with weaker data. But since I'm very tiny in position only, and I want to, for the real long term, I still think it's going to go higher in some way or form, or sometimes I'm going to start to be looking at if we get into this zone here. And with that, Ryan, back over to you for today.
Thank you very much, mate. Just to answer Matthew, talking about France, he was surprised at how downbeat the mood was. One of our roomies, James, he was over there on holiday, and remarked how upbeat it was with all Olympic parties and things going, street parties and everything going on. So maybe they've just taken a little break from domestic life to enjoy the Olympics, and reality will resume itself once that's done and dusted. Right, that's it for today. Have a great day. Watch out for the BOC. Hopefully we've put you in good stead what to expect, what to look for, how to trade it. So stay safe over it. Don't forget to take advantage, if you will, or if you wish, of that offer we've got going on the ForexAnalytix platform and chat room, where you can come and talk to me and Cayman each and every day. Have a good day, everybody. Thanks very much, Kay. We'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.